Mr. Ted Butler of Butler Research. Thanks for coming on our show.
Thanks, James. Nice to be here.
Ted, to start off, I think we really want to tackle probably the most important news that we've seen in this market, at least on a lot of the stuff that you research and talk about. We got to start out with the Department of Justice and what they did with this 13-year veteran JP Morgan trader. I would like to give you the floor because I'm sure you have a bit to say.
Well, yeah, I think it's, probably, one of the most significant developments that I've seen. And it's basically all I've been thinking about and writing about since the announcement came out a week or so ago, November 6th, Election Day.
Right.
It's extraordinary in the sense that it's not a charge; it's a guilty plea. So it's a charge and a conviction. And what's so extraordinary about it is that it in the body of the Justice Department announcement itself. It lays out the case. It says how this guy was working with other traders, doing basically the same thing, spoofing, manipulating prices, with the full knowledge of the bank and its supervisors.
Mm-hmm.
And this is criminal stuff. This is a guilty plea on a criminal basis. I don't know how much, if any, jail time the trader will get because I'm sure he's singing like a bird or has sung like a bird and has cooperated fully, and that's where the significance of this comes in. J.P. Morgan somehow, even though they're the big kahuna in terms of the biggest crook in the silver and gold market, has somehow managed to sidestep any accusations or charges from the CFTC, the commodity regulator, up until now, and bam, the Department of Justice has come in and extracted a criminal guilty plea from one of their traders with the hint that there's going to be lots more to follow, and a big deal.
Yeah. I'd be remiss in not asking you. You've written about this for those listeners out there who may not know of you. You've been writing about this kind of stuff, the last decade for sure. You've been in the weeds with the JP Morgan saga. But even going back even further with Bear Stearns, all the way to the mid-'90s, you've been on the internet talking about silver. So, I mean, if I was to ask anyone what this means, you were the person I wanted to talk to about it. You wrote that it was a bit relieving. I want to kind of explore that for a second.
Well, yeah, that was a lot of people have come back and say, oh, congratulations. This is like a complete vindication for everything that you've done and all this kind of stuff, and I appreciate that, and it very well may be. We're not quite there yet, so let's. I don't want to get too excited, but it was a relief in the sense that, look, you could say what you want, but you don't call J.P. Morgan crooked on a continual public basis, along with the CME Group, the owner of the COMEX, without some kind of trepidation and fear that these guys are going to come at you. These are the most powerful organizations on the face of the earth, and no one calls any major financial institution crooked and criminal and expects to get away without some kind of repercussion and lawsuit or whatever. So the relief I feel is that with this Justice Department announcement, guilty plea, it greatly diminishes any chance that J.P. Morgan or the CME is going to come after me on a legal basis. They got more they got more problems right now with the Department of Justice than to be messing with me, I believe. Now, maybe I'm wrong. Maybe they're still going to come after me, but correctly or incorrectly, I feel relief at the announcement.
Yeah, I mean, I of course I've probably been echoing a lot of the research that you've done over the years, and I personally feel the same way. So I can only imagine how you might feel. You've been spearheading this for so long. So moving on, I kind of one other question about this, which I found interesting. Obviously the CFTC wasn't the one that did this. This was the FBI, this Department of Justice. This is the FBI. I mean, the federal government essentially. I found it interesting. They didn't even say JP Morgan's name on their website. And then secondly, the CFTC, obviously in 74, they kind of, if you look at the cables from WikiLeaks, you can tell essentially they were set up to help foster a derivative market in gold where there would be a lot of volatility and dissuade perhaps U.S. citizens from hoarding gold versus saving in U.S. dollars. So I just found it interesting that, obviously we've reached a level where now the federal government, the FBI, has gone in and done this versus some, small agency like the CFTC.
Yeah, well, I don't know so much about the formation of the CFTC in '74. What the intent of the futures models. I'll skip that, but
Sure.
I will mention the business about J.P. Morgan not being named in this Department of Justice announcement of a guilty plea is, I wouldn't read too much into that. It's just government policy not to name any organization that is not being charged with a crime. They're not charging J.P. Morgan here, so
Sure.
It's just government practice not to mention the name of the organization, say that an individual trader is being charged with. Mm-hmm. It doesn't mean that they won't be named in the future,
Sure.
And I would fully expect that. So I wouldn't read too much into the fact that J.P. Morgan wasn't named explicitly in the announcement. Mm-hmm. Certainly, the Financial Times of London and the online version of CNBC that picked up the same story. It's not hard to figure out where
Sure.
the guy worked. Okay, it's like so. It's not a particularly big thing at that point.
Okay. All right. Well, moving on to another topic, I wanted to go through, if I could, with you, the amount of silver that we think JP Morgan may have, because obviously they weren't really in the COMEX as far as their warehouse wasn't around until 2011. So maybe even backtrack to when they took over Bear Stearns, and then we could break out how you come to this figure that you do with regarding maybe potentially how much physical silver they actually have.
Sure. Well, just to set the timeline, it was in March of 2008 that J.P. Morgan, at the request of the U.S. government, the Federal Reserve, and the Treasury Department, took over Bear Stearns, which was about to fail, and took over at that time. I didn't know it until then, but Bear Stearns was the big COMEX silver short in both silver and gold. And J.P. Morgan, by taking over Bear Stearns, took over the short position of Bear Stearns. And for the next few years, 2.5 years, J.P. Morgan prospered in the role of being the biggest COMEX silver and gold short seller, and made a fortune of money, hundreds of millions, perhaps maybe even $1 billion or more in continually shorting and buying back the short positions. But then silver and gold prices started to firm up at the end of 2010, and on the way to $50 in early 2011, into April of 2011, J.P. Morgan, which was short the market, was in trouble. They had a short position that was bleeding money, and they had to do something about it, which they did. They figured out how to crack the market, and we had that historic sell-off in May of 2011. But it was a significant time because I think at that time J.P. Morgan experienced the fear of God, what could happen on a big short position on a price run-up when silver ran to close to $50. And they made the conscious decision right then and there, and it was genius as far as I'm concerned, criminal, but genius, that the way out of their big short position was to amass as much physical metal, both silver and gold, that they could head off any problems later on another price run-up. And basically in April of 2011, it's a critical date because not only was it the peak in its silver prices at $50 and then they came down sharply. It's when J.P. Morgan started to amass physical in very open, in retrospect, open ways. They opened their COMEX warehouse for the first time, had zero in it. Today they have 150 million ounces in their own warehouse, most of which they've taken delivery of on futures deliveries on the COMEX, even though they were short, more short than long the entire period of time. And they started to do other things in amassing physical, I'll stick to silver right now, but they did the same thing in gold, have done the same thing in gold. But I'd say they got, I think they have roughly around, starting in April of 2011, they've been able to accumulate around 800 million ounces of silver, over 20 million ounces of physical gold. The breakdown would come, well, 150 is right from futures deliveries, roughly. So 150 of the 800 million is what they have in their COMEX warehouses. Now, where'd they get the rest of the 650 million ounces that I claim that they held? Well, they started at the same time in that same period of time, April 2011, to accumulate and buy directly from the U.S. Mint and the Royal Canadian Mint in Canada, bullion coins, Silver Eagle and maple leaves. And for the next 6 years, roughly 6 years, they accumulated roughly 150 million ounces, I say, of combined of silver eagles and silver maple leaves, every single one of which I would allege that they've melted down into 1,000-ounce bars, because there's no way you can sell 150 million ounces of coins without crushing the market. You can do it if you have it in 1,000-ounce bars. So I say they've gotten 150 million ounces from there. So with the COMEX holdings that they have, that's 300 million. There's still 500 million ounces to go. I'd say the 500 million is evenly split. The 200 to 300 million on either side. There's a little vigorous here. I'd say one source of it was we've had a just absolutely unprecedented, doesn't exist in any other commodity, incredible physical, not paper trading, physical turnover, movement of silver going into and leaving out from the COMEX warehouses, J.P. Morgan having one of them. Okay, there's 5 others that are major. There's 6 in total that are important. But they're over the last, since April of 2011, again that date, they're started out of nowhere, because I've followed the data for like 30 years before that. We started this incredible physical movement, truckloads of silver going into and out from these COMEX warehouses, And the total amount that has moved over the last 7 years into and out of these 6 warehouses is on the order of at least 1.5 billion to 2 billion ounces total movement in and out. And of that 2 billion ounces physical movement, I claim that the whole reason for it is that so J.P. Morgan can skim off and take, while no one was looking, gets lost in the turnover, as much as 10% of that 250 million ounces or so of that total turnover has ended up in J.P. Morgan's possession. This is physical silver again, not in the COMEX warehouses. They already got 150 million there. I'm talking about 250 million elsewhere, principally London. The last 250 million ounces that I claim that J.P. Morgan has amassed, they've been able to do it in their role as the custodian for the largest silver ETF, SLV, in the world that has like 330 million ounces in it. But over the last 7.5 years, in their role as gatekeeper, custodian of the SLV, J.P. Morgan has been in the catbird seat to basically buy shares of SLV in the open market, and at the same time, when they start to approach the SEC mandatory 5% ownership reporting requirement, they quietly convert the shares that they've purchased in SLV into metal, into physical metal, which they can do. They're the most. It's easier for them to do than any other authorized participant. So they've been able to convert shares, that they buy in SLV into physical metal, because that's how the trust operates. And they've amassed another 250 million ounces of physical silver in this particular conversion process. So you add them up, and you come up with close to 800 million ounces of physical silver. And I mean, when you go back and look at it, it's hard to see on a day-to-day basis what they've been doing, but when you go back and look and reconstruct what's taken place, it comes into view. And the one thing I'll say, aside from the question that you raised, the point that you raised before about the relief that I felt at not getting sued by J.P. Morgan, they don't say nothing about anything, okay? You make these public, I make these public allegations, what they're doing and what they're doing wrong, and you hear nothing, which is so unusual because, look, if they weren't doing what I claim they're doing, they should speak up. It wouldn't be right for me to make these allegations that these guys are such crooks, which I'm doing clearly with you now, and for me to get away with it if it wasn't correct. And who else should correct me if I'm saying something wrong about them than J.P. Morgan? Yet the cat's got their tongue for some reason, and I think it doesn't prove that they're the crooks that I say they are, but it certainly it doesn't argue with it either.
Right. Now, before this interview, I did send over a chart, not a chart, but it was basically a data file of issued contracts versus stopped contracts that Nick Laird, he sent over about a week or two ago to his subscribers over at goldchartsrs.com. I shared with you the fact that J.P. Morgan, over this time frame that we've discussed from the beginning of 2011 up to the beginning of November this year, it looks like their customer versus house percentage, which I found very interesting. I had never seen a breakout, anyone ever do this. Maybe you've been doing it in your files. I'm sure you've been keeping records. But they had a customer delivery of silver of 41% over this time frame versus 59% in the house account. Was there anything that maybe you derived or gathered from it? I mean, other than maybe just the simple math that maybe of the 150 million ounces in the COMEX warehouse, that about 100 million is probably in their house account?
Yeah, no, that's exactly what. I mean, in fact, I was Nick Laird and still am a first subscriber to his service. I know the data that you're talking about. What it shows is that since 2011, April of 2011, that J.P. Morgan in their house account, they deliver and stop and issue contracts, COMEX silver and gold contracts, both for customers and for their own account, their own house proprietary trading account. If you look at the data in silver and gold too, but in silver, on a customer basis, the amount of contracts that they've issued in total over this time roughly equates to the amount of contracts customers have stopped. It's like it's a wash. But if you look at their house account, you see that there is a net of about 20,000 contracts, which is the equivalent of 100 million ounces, which they've stopped taking in terms of deliveries in their house accounts. And what I would say clearly is that of the 150 million ounces that J.P. Morgan holds in their COMEX warehouse, 100 million ounces came directly from the net stopping of contracts, futures contracts in their own house name. The other 50 million they got before they started taking deliveries, really over the last 5 years that they've been taking delivery. So Nick's statistics confirm absolutely that most of the COMEX, the 150 million ounces that J.P. Morgan holds and put into its COMEX warehouse, it got from futures contracts deliveries on futures contracts, silver futures contracts over the last, it's really 5 years, but you can go back 7.5 years. So it's a confirmation more than anything else that, some people say, the reason I'm making a big deal about it, some people say, well, 150 million that J.P. Morgan holds in its own COMEX warehouse, that could be for clients. It doesn't prove that it's their silver, the bank's own silver. I say horse crap. I mean, they've gotten delivery in their own name. They move the stuff in ounce for ounce afterwards. I do this, every week. I analyze every delivery period. It fits like clockwork. There's no question that the 150 million ounces that J.P. Morgan owns in its own warehouse is theirs. And to argue otherwise, it's just people just want to argue, that the sky is blue or something. I don't know.
Right. And so over these years as well with SLV, my hunch is you've been watching these withdrawals like a hawk on a week-to-week basis as well. So this estimate that you have of about 200 million ounces that they've likely withdrawn out of there is probably reflective of all the work that you've put in there.
I'd like to see J.P. Morgan come back and deny it.
Yeah.
That's what I'd like to see.
And then, of course, you and we've had a little contentious debate through email occasionally about your silver coin. You basically assert that they've taken sovereign silver coins off the market. I've personally been in this industry since just over 10 years. A lot of your writings what got me in this industry. But just working in the industry, I've worked for dealers that have lost market share, and I've worked with dealers that have gained market share. And, my feeling is I've worked with dealers that I thought, I thought we were tiny. But then when you crunch down on the American Silver Eagle market, we were representing one coin out of every tube that was going out the door. So 1/20th of every Silver Eagle we had a hand in selling. So it was just surprising to me. So I thought it was dubious at best in the idea that J.P. Morgan would actually be buying Silver Eagles or Canadian Maple Leafs. I mean, I wonder how you make the assertion, who you spoke with, how you got the idea that was possible.
First of all, I respect disagreement. I mean, there's nothing wrong with that. Basically, the way the whole concept came up, that J.P. Morgan was buying Silver Eagles, which I admit sounds like on the face of it, like why the heck would they do this? Mm-hmm. First of all, you got to pay like a $2 premium or something like that. Why would they bother doing that? Why wouldn't they just buy what they wanted elsewhere? Okay, mm-hmm. So I understand where the disagreement would come in, mm-hmm. But let me just give you a little bit of a background how I stumbled upon this. Sure. Okay. I've have contacts in the retail bullion coin business, sure. And I've been sponsored by one of them, Investment Rarities, mm-hmm. for it's going on 20 years. I think we passed the 18-year mark that right. They've sponsored my work, so I have a familiarity. And in talking with Jim Cook, the president of Investment Rarities, during this period of time you're talking about, 2011 onward, there was record sales, of Silver Eagles. It's a matter of public record that you can retrieve it now from the U.S. Sure. Mint's website. Record sales of Silver Eagles, record sales of Canadian Maple Leafs. Yet, based on the reports I was getting from the front line, what was happening with retail demand didn't match. What the sales that the U.S. Mint was recording, and I don't think for a minute that the U.S. Mint was lying in any way. They were recording and posting what they were selling. It's just that the question was, who the heck is buying it? Right. And based on we're talking about a 5-year period of time where sales were at record. There were like 40 million coins a year from Silver Eagles alone. It didn't match. I'm like, right. You asked the question. Okay, look, I'm hearing from dealers saying that there's not this big sales that there's no retail demand for the kind of sales that the U.S. Mint is reporting, or that the Royal Canadian Mint is reporting. So where the heck is it coming from? Right. So after a certain period of time, it dawned on me, wait a minute, there has to be a buyer. Mm-hmm. The Mint, the U.S. Mint isn't lying, okay? Right. And I don't think the dealers are lying. They're saying that this is a time period, if you recall, a number of dealers went out of business, including Tulvin right. and several others, mm-hmm. Okay? So sales generally weren't that good. So the only way of reconciling, the recorded sales, record sales from the U.S. Mint, and the lack of sales from retail dealers that I ran across and read about, is somebody had to be buying it. And when you stop and think that this damn J.P. Morgan is up to their eyeballs in everything involved in gold and silver, mm-hmm. By process of elimination, it got to be them. Right. And then the final proof is, that a couple of years ago in 2016, I think the heat started to come on J.P. Morgan, because this was getting to be obvious that they were selling all these Silver Eagles and there was no big demand for silver, because silver's been going down in price for 7 years. People don't buy stuff that's going down. Mm-hmm. They only buy stuff that's going up when it comes to investments. Right. So silver's been coming down, price has been coming down for 7 years or years mm-hmm. at that time, and yet they're reporting record sales. I think J.P. Morgan started to get a little bit nervous, and at the same period of time when I inquired with the U.S. Mint, as to who they're buying, they clammed up. They wouldn't disclose who's buying. For a couple of years running, they wouldn't even tell you who their authorized dealers were. Right, I think they do now that the crisis has passed. But the fact of the matter, I think J.P. Morgan started to get a little bit nervous that, look, this is going to be exposed. It's going to be a scandal, because if J.P. Morgan was buying the coins that I allege they were buying from the mint, okay, both Canadian and U.S. mint, it would have created a stink, I believe. So they ducked out, stopped buying, and what happened? As soon as they stopped buying, sales collapsed. And we've had nothing but crappy sales of U.S. Of Eagles and Canadian Maple Leafs since they quit. So as far as I'm concerned, I understand the skepticism. I respect it. Reasonable people can disagree on a reasonable basis, okay? But I'm looking at these record sales, okay, that all of a sudden got turned off like a spigot, and I'm saying, how do you explain that? How do you explain that these sales were exploding for 5-6 years running, and all of a sudden came to a screeching halt? It's the most plausible explanation is J.P. Morgan was the big buyer, and J.P. Morgan stopped being the big buyer.
Now, just in a respectful response, I think you underestimate the amount of effect that your work and others who've been alongside you or working underneath some of your research has had on the market. I know of Jim Cook's Investment Rarities. I used to get he used to physically mail a lot of your writings to my address, and I used to read a lot of your stuff through the writings that they would print and send in mail form. My hunch is the majority of the clientele over there is probably older and maybe not as internet savvy. What I don't think you fully understand is the effect on the younger generation who buys online, who doesn't even bother calling the dealer. What they want is the most efficient thing possible, which is 1 minute, 2 minutes, I'm out, and it'll be in the mail, and I'll get it in a week or two. So my argument might be that perhaps your sources were losing market share versus others that were gaining market share. And the one reason why I see this drop recently, it just seems like this crowd that really understands it, that really gets why you should own gold and silver long term. Maybe they're running out of cash a little bit as time has gone along. We probably got a lot of the people who came in head first, greedy in 2011, 2012. A lot of those people have probably sold off. They're probably the weaker hands. But there is a very rabid base of bullion buyers, a lot of them who are doing it because of the things that you've been writing about for decades. They're out there, and when the price goes down, I see it. The phones won't stop ringing or the orders come in. They buy on the dips, and they're very, very, very aggressive. And so, the contention still lies, and we'll just leave it as it is and we'll move on. But either way, you shouldn't underestimate the effect that you've had. I guess thanks, and we'll leave it at that. Yeah, that's fair enough. Okay. Cool. Let's see. Moving on. Of course, there are like naysayers out there, and they're going to be griping, saying that this could go on forever. This J.P. Morgan having a pigeonholed, say, on the silver market through the COMEX and the SLV positions, and the fact that there's just ridiculous turnover that we see going on in the physical world, and they're possibly siphoning off, as you allege, maybe 10% roughly of that turnover. There's naysayers out there who think this is going to go on forever. In the past, you had the Hunt brothers in the late 70s who went very large into silver with 100 million ounces physical, about 100 million ounces in leveraged derivative form. And when the price fell through, they got called on margin, and obviously things went awry. And what I would argue is they got scapegoated after that. But my hunch is the main majority of their betting on this was through greed, perhaps a little bit of fear of what could happen with the U.S. dollar. Then you move along to Warren Buffett and Berkshire Hathaway in 1998. They amassed, roughly 130 million ounces between 1997 and 1998. And I was looking at some data. The lease rates in silver right after they amassed their position exploded. The lease rates for a month or two were somewhere in the realm of 70% per annum. And so, if someone was buying, silver, or if someone couldn't make delivery, they had to pay a sweet premium to Berkshire Hathaway. And if anyone knows anything about Warren Buffett, he loves moats. So basically, he loves cartels. Basically, he likes to have a position where there's no competition, and that's typical of someone who's a business magnate, I suppose, is how some people think of it. And he gives off a nice cuddly veneer, but don't be confused. He did that for profit. My hunch is, and I'm sure you believe it too, JP Morgan is doing this for a profit play. How do you think they may profit out of this type of play? Maybe coming up in the 2020s, what might be their way of profiting out of this?
Well, I mean, you've put it very well. I mean, I believe, as obviously you do as well, that J.P. Morgan is in it to make a buck, is in it to make money. Nobody accumulates anything, whether it's land or stocks or bonds or metal, without the idea of making a profit on it, or either selling it or watching it go up over time. So I don't think there can be much argument that J.P. Morgan, if they have amassed the 800 million ounces that I claim that they've amassed in silver, has done it for any reason other than to make a profit on it. And I think therein lies the answer to those that would claim that this thing is going to go on forever, this manipulation, and the price is going to be depressed. It doesn't make sense. I mean, eventually you have to put the thing on fast forward and get to why is J.P. Morgan accumulating all this metal? I tend to keep things simple, maybe because I'm a simple guy, but it's like you buy something because you think it's going to go up in value. So obviously J.P. Morgan thinks that believes that silver is going to go up in value. I think it's a little bit more than believe. I think they control the damn market, okay? But so they can make it go up when they want, which is an added bonus. So, yeah, no question. Look, the thing has lasted much longer than I ever would have imagined. This thing has lasted, this silver manipulation has lasted for more than 30, 35 years. I've been at this. But in the last 10 years, and particularly the last 7.5 years, we have this extraordinary development of J.P. Morgan buying more silver, talking about 6-7 times as much silver as the Hunt brothers or Warren Buffett ever bought. And they had the same motive that the Hunt brothers and Warren Buffett had, which is namely to see the thing go up in price and to make a profit on it. So even though it's been delayed, okay, don't let the delay fool you. It's like they've amassed more of this particular commodity than anybody in the history of the world, save perhaps the U.S. government, who wasn't doing it for a profit motive when they acquired 100 years ago all the silver that it once held. They did. The J.P. Morgan has done this for a profit. The difference is, unlike the Hunt brothers and Warren Buffett, the crooks at J.P. Morgan have been shorting the paper market for the last 10 years, keeping the price depressed while they pick up this massive amount of physical silver on the cheap, which is, you can't get more crooked than that. I don't understand how. I mean, I'm wondering where the Department of Justice was up until now, but it's like you couldn't make a better example of a means motive, and opportunity for the most massive commodity manipulation in history, and it's unfolding in front of us.
So moving on, I wanted to touch a little bit about it because I find it really interesting. You've done really great research on the Bank of Nova Scotia, or what some people call Scotia Bank. Now, in the data, they're, in that CME delivery data that we talked about that Nick Lard put out, it looks like they were working, basically for their house account fully. 100% of it was house account delivery. And their delivery numbers in silver over this same 7-year time frame are pretty close to the size of JP Morgan. Not fully, but they're close. Obviously in the last year or two, they were trying to sell their desk, their bullion desk, and now that they haven't been able to sell it, they claim to be drawing it down. I wonder if you have any updates there, or even if you want to go into a little bit about Scotiabank and how they got involved.
Well, I mean, I think that they, in fact, that was Izzy Friedman's before J.P. Morgan came along. He was, he laid the finger of blame as the chief manipulator of silver at Makata, even before Scotiabank bought them. So there's a history, I believe, of Scotia Makata or Makata being involved in the silver manipulation. But I think it's an old story now, or it's a story whose time has passed, because I think in terms of ebb and flow, Scotia Makata has definitely ebbed. I don't think they're a major factor anymore. I think they still may be hanging on, but they're not the organization they once were. As you say, they've been trying to sell it. They can't sell it. It's a pig in a poke. It's like nobody wants it, and I think, and so it's kind of like just winding down and grinding down, and I don't think that the Makata or Scotia Makata is the entity it once was. I mean, compared to J.P. Morgan, I mean these guys are not even, a flea on an elephant's butt, as far as I can tell. But no, it's their day is past. Put it that way.
So you're out there, as far as anyone wants to learn about your writings for Scotiabank, you can find it. You did some really good analysis, though, I thought was interesting, about the price action from late 2015, early 2016, where we had silver near about the same spot price that it's at now, and then it ran up to $21. And your assertion was that Bank of Nova Scotia was likely on the short side of that, and they had some huge losses, and that likely made the headquarters question what they were doing in the proprietary trading unit. So anyone who wants to do that, to find Ted's writings out there, I'm sure you could find it with a simple Google search. Moving on, Ted, I wanted to get some of your thoughts on this massive crude oil market sell-off that we've had. You did send over, you were kind enough to send over some of your newsletter writings for your paid subscribers. You sent me one that you did this past week, just discussing kind of the crude oil market and how it works, and how the hell crude oil got hit by 20% over the last week or two, and perhaps what are the similarities between that and what's going on in the precious metals markets?
Well, good. Thanks for the opportunity. Look, I claim that the price of silver and now crude oil and other commodities has come to be controlled by futures trading, by positioning in the futures market. And the chief, it started in silver first. It started like 30 some odd years ago, but it's progressed, and now I think other commodities such as crude oil, which is by far the most important commodity in the world. It's the biggest. If you're going to put a dollar amount on it, the production of and consumption of crude oil is like 150 times larger than, say, silver. But they share something in common, and that's namely their price of each is being set by COMEX, or in the case of silver, NYMEX in the case of crude oil, futures positioning. There's been this, over the last number of decades, an explosion in the trading by one particular group of traders called that I call them the technical funds. They're in the managed money category of the disaggregated commitment of traders futures report, and basically they've become so large that they control prices. They're easily manipulated because they buy and sell on a mechanical basis based upon price. If prices are going up, they buy. If prices are going down, they sell, particularly as moving averages are penetrated. Knowing that this is the way they operate, and they have something like collectively like more than $300 billion worth of investor assets under management. And even though they only trade, a certain portion of the amount of money they have under management, because they're doing it on a leverage basis in the futures market where you can operate on, say, a 5% leverage factor. You put down 5%, you can, not borrow, but you can control, maybe 20 times that amount in actual futures contracts. That their collective positioning is astronomical and is responsible for why prices go up and down. And in the case of crude oil, just to give you an example, this recent $20 drop, which is closer to 30% over the last 6 weeks, basically is as a result of these of prices coming down and moving averages being penetrated, and all these technical fund managed money traders all exiting and selling at the same time. As prices go down, they keep selling and selling what they had previously accumulated, and also, going short new positions. And the numbers are astronomical. You get it from the Commitment of Traders report, and when today's report comes out, which is a little bit early, 3 hours from now, you'll see another big episode of managed money selling in crude oil futures. This will be as of Tuesday. And the amount will be, over the last 6 weeks, the amount will be a total of more than 225,000 contracts, net contracts of crude oil will have been sold by the managed money traders. Now that equates to 225 million barrels of oil. The world produces 100 million barrels and consumes 100 million barrels a day. If it's out of line by 1 million barrels, that's a lot. So here you got a situation where a certain group of traders in the last 6 weeks will have sold over 225 million barrels of oil, not real oil, paper oil, not wet barrels, actual barrels of oil, but paper barrels. But it has the same effect on price. And anybody looking for a reason, and it's a good thing to look for, because when the world's most important commodity, crude oil, drops by close to 30%, the most ever in nearly 35 years, in a 6-week period of time, a reasonable person would want to know, why the heck did that happen?
Right.
Why did the world's most important commodity drop so much in price? And that person, if he was being objective, would see immediately that it was the sale of over 200 million barrels of paper contracts, 200 million barrels of oil that was sold on the market indiscriminately by these idiot technical funds, these managed money traders, that's the reason it went down. And that's the same thing. The connection with silver and other commodities like gold is that these managed money traders, these technical funds, are the ones that are driving prices up and down. In the case of silver, J.P. Morgan knows this, knows how these managed money traders operate, and they can maneuver them in and out of the market. Now, I don't think it's J.P. Morgan and crude oil, so I don't want to accuse them of being crooked in everything, But in the case of silver and gold, J.P. Morgan knows how to manipulate these technical funds, and that's what's they get them to buy so they can take the other side of it. Okay, they get them to sell so that they can take the other side of it, and it's not right. It's like this is our price discovery process is thoroughly screwed up. The CFTC should be drawn and quartered, okay, for allowing it to happen, and they won't even address it. And it's a big problem. I think it'll be addressed sooner or later. Maybe it'll take the Department of Justice and not the CFTC. But I'm glad you brought it up, because crude oil prices didn't go down because people were using less oil or that too much oil was being pumped. It had nothing to do with that. Right. It was all a paper transaction on the NYMEX, and it's terrible.
No. Well, Ted, I want to thank you as far as, you've been an influence in my work as far as the feeling like I had to go down the price discovery rabbit hole. And once you go down the price discovery rabbit hole on any commodity, you start to learn, oh my God, it's pretty much driven by derivatives, not so much fundamentals. At least at the moment, that's been the case in a lot of commodities. And you highlighting that in the crude oil market, I think helps enlighten to folks the depth and the sophistication that's going on in some of the trading and some of the increased volatility that we've seen in commodities up or down over the last few decades. Ted, just to go on, and I want to conclude with a few questions. That I want to take you back, to your Izzy Friedman days. Back in
sure.
I suppose you had met him. I'm not sure what year it was that you maybe met him. What's the backstory on that, and then taking you up to date, just how you got to meet him and how that unfolded.
Well, he was a roundabout way a client. I was a commodity broker. He wasn't my client at the time. He was another broker's in the office, Drexel Burnham, but we got to talking. I followed markets very closely. He followed markets very closely. So we developed a relationship. And anyway, make a long story short, he was a very successful trader. He bought silver, in the mid to late 1970s at $4 or $5 an ounce, and sold it. When it ran up in the Hunt Brothers manipulation. He didn't get 50, but he got $40. So he had a score from 4 to 40, which is a big score in a commodity market. And so basically, he knew what he was doing, and he came to me one day after he had cashed in silver. When it went to $40, $50, eventually came down again, and he said, he gave me a challenge. He said, we're using more silver, industrially, than we're producing, and yet the price doesn't go up. Why is that? And, it was a good question. I didn't have the answer. How could you be using more of something than you're producing and not the price go up? I mean, it's crazy. If you believe in the law of supply and demand, then you know that that's impossible. So he asked me the question, how do you reconcile this? What's the answer to this question? And basically, it took me a year to figure it out. This is around 1985, and the answer, it dawned on me one day like a bolt of lightning, that same as the discussion we just had in crude oil, it had nothing to do with the fundamentals. It had to do with the derivatives trading in futures contracts on the COMEX. And it hit me that all these big banks, were shorting, selling short such massive amounts of contracts that other people were buying, small speculators, big speculators were buying, that's what was setting the price, and that in and of itself is manipulation. It hasn't changed since then. It's coming to the forefront now, but that's how I got into this thing on silver. Is he issuing me a challenge to explain how the heck the price wasn't going up when we were physically consuming more than we were physically producing. And thanks to just by luck, thanks to my background in futures, which is my living, I was doing it as a living, a futures broker. It dawned on me that was the answer, and that's been the answer ever since.
Yeah, that's great. Thank you for that backstory. And that's a many decade saga that obviously has unfolded since. What has surprised you most from then, to date? What has been the most surprising thing?
How long it's lasted. That's hands down. And the reason it's taken so long is that this discovery of mine in thanks to Izzy's challenge in 1985 is that when I saw it, the very first thing I did, I took what I thought was the high road. I went to the authorities with this. I went to the CFTC. I went to the COMEX. I went to the Chicago Board of Trade, where they traded a silver contract as well. And I said, hey, look at this. This is the reason that the price of silver is where it is. Not that they were asking. We've got too much speculation here. The derivatives market has grown so large that it's overwhelming the physical market. The derivatives market is supposed to be derived from the physical market. It's not supposed to be controlling the physical market, and yet this is the opposite, because we got the statistics. We're showing how many contracts were sold, how many ounces of paper contracts exist versus how much is being produced, etc. And I got a collective no thank you that we're not interested, because, and then dawned on me, the reason they're not interested is because it's a threat to their business and their industry. Right. It's like, this is a big multi-billion dollar industry, this derivatives trading business and exchanges, etc., that for someone to come along and say, hey, wait a minute, this is all wrong, no one's interested. Yeah. And that's been the case for the last 3 decades. The problem is that it's gotten so out of control that we got situations now, like I just described in the crude oil, the price drops 30% in 6 weeks period of time for no good reason other than one specific group of traders that number no more than roughly 100 traders, all decided to sell collectively because they all got technical fund sell signals, and that's going to drive prices, whether these idiots get buy or sell signals on paper contracts. It's like lunacy. Yeah. So I have a feeling we're going to be reaching ahead on this, and I think it can happen first in silver, but if silver can be manipulated, if crude oil can be manipulated in price, and there's no other way of saying that this big drop was artificial manipulation because of these technical funds selling, then it's the easiest pie to make the case in silver or gold or something like that. Sure. And because they're much smaller and less significant than this crude oil. So I have a feeling we're getting to a head, and I have a feeling that this DOJ guilty plea in the case of silver and gold, this J.P. Morgan trader, could be the precipitating agent for a very, very big change. Mm-hmm. And that change, when it comes, for sure, is going to drive silver to the moon, price-wise. Yeah.
Ted, is there anything over this whole time that you might do differently, looking backwards? Is there anything, just reflecting on all the decades that you've been doing this?
Ooh, I haven't thought of that one. Look, I don't know. I don't know what I could have done differently. Maybe I abandoned it completely. But I think it's an important issue. Yeah. There's very rare that in life that you get, the opportunity to have an impact on something that might be important. Right. So I wish it ended sooner. I think it will end. I hope it ends before I die. And I know it will end at some point. I just wish it ended sooner. I can't really say, you know, what I could have done things better, but you know, you do the best you can.
Yeah.